Well, first of all, I don't know that the Fed is actually draining it fast enough. I mean, the balance sheet's still around $4.5 trillion. I mean, $8.5 trillion. So it's an enormous balance sheet. I mean, it's only come down maybe $0.5 trillion from its peak. But of course, the balance sheet blew up a lot faster than it's shrinking. Remember how quickly we inflated that balance sheet? The deflation is taking a lot longer. And I think it's going to be aborted. I don't think the Fed is going to continue on this path because the rate hikes that we've already had are taking a toll on the economy right now. And we're just beginning to see the effects. And it's going to get a lot worse. Remember, it's only been a year, not even, since the Fed raised rates for the first time, right? So, there is a lag between the increase of rates and the effect on the economy. And so we're just kind of catching up to those effects, but they're going to be enormous in all segments of the economy. I mean, not just the stock market and the real estate market, but you have an American economy that's based on cheap money. I mean, that's what it was running on for more than a decade. Well, now it's time to pay the piper. And everybody's broke. You can't pay the piper. So that's bad news for the piper who thought he was going to get paid, but it's everybody else too, because now they can't get any more free music or entertainment. So there's a huge day of reckoning here that we're just on the cusp of.
Let's take kind of each segment of the market or each market participant independently. What does this mean for small business owners or individual investors or consumers? Is there kind of a full-on recession? How bad is it? When does it happen? How are you thinking about what the impact of this situation will be on the average American or those small business owners?
Well, yeah, it's going to be a huge recession. I think it'll be a bigger recession, a deeper recession than anything we've experienced in our lifetimes. And, because bust is proportionate to the boom. And this has really been an unprecedented boom created by Fed, created by artificially low interest rates and quantitative easing. And so this could be one hell of a hangover. That's what's going to happen. And, but different people are going to be affected differently. The definition of a recession is when your neighbor is out of work, and it's a depression when you're out of work. So, not everybody's going to lose their job, but I think everybody's wages are going to be reduced in real terms. So even if you don't lose your job, I think that the money that you earn is not go as far when you go to buy stuff, because I think unlike previous recessions, this one is going to be inflationary. You're going to have recession and inflation happening at the same time. And that's what's going to make this recession so much more painful, because even if you don't lose your job, it's going to hurt. And I think most investors are going to lose money. I think most investors over the last decade or two have been channeled into the wrong assets by the artificially low interest rates. So a lot of people own very high multiple companies, growth companies, and in fact, companies in many cases that don't even have any earnings at all, right? They were just speculating on earnings in the future. But people were willing to do that when the cost of money was basically zero. But I think as the dynamics change, a lot of people are going to realize that they're holding the wrong assets and they're going to get repriced and marked down. So, there's going to be big losses for most investors that, have the FANG stocks or a lot of these stocks that did really well, when the Fed was blowing up the bubble, but they're going to do horribly when it bursts. And then, the same thing for your favorite cryptocurrencies. I mean, cryptocurrencies also got caught up into the speculative mania. The air is going to come out of that bubble too. So a lot of people that had a lot of money, or at least they thought they had a lot of money in their digital wallets, are going to find out that there's really not much there. I mean, they'll still have the crypto. They just won't have much real money if they try to sell it.
When you look at the assets that will do best, so you talked about FANG stocks, crypto, a couple of other assets that you anticipate will do poorly in this environment. What are the assets that you're most excited about, or that you think the average individual likely will end up benefiting if they are positioned correctly?
Well, I mean, these are the assets that I've been buying for a long time, anticipating this. It's not like I just woke up and decided. I've been planning for this for a long time. In fact, a lot of people would say, well, see, I'm wrong because I've been saying this for so long. I wasn't wrong. I just knew what was going to happen a long time before it did. But I think the assets that are ultimately going to do well are, one, commodities. I think commodities are going to do extremely well in an inflationary cycle. And that's, all sorts of commodities, industrial metals, agricultural commodities, oil and gas. So I have investments there. And of course, precious metals, they're going to do very well. Gold's the king of all commodities. And I think it's going to do very well in a commodity bull market, especially if we ultimately end up having a dollar crisis, currency crisis, and gold is, remonetized in some shape or form, either by the private sector or by various governments. And so there could be a huge increase in the price of gold in this type of environment. But I think that there'll be a lot of money lost in bonds, paper assets. I think think that people that own quality real assets will do better. And so that's the value stocks. I mean, companies that actually have big earnings right now, not companies that might earn money in the future, but that earn a lot of money right now and have been earning a lot of money in the past, so that the income is reliable and dependable. And the companies are selling goods and services that people really need to buy, and they'll buy them. I mean, maybe they'll buy a little bit less, but they'll keep buying, and they'll cut back or give up something else in order to buy these things. And so you want to own those businesses. I think the businesses that cater to consumers that don't have a lot of debt and that have more productive jobs are going to be better, because their customers are going to be in a better position to pay. And, so that would exclude, the US. I mean, some Americans will be able to pay, but a lot of Americans will be too broke to buy products. I think the emerging markets are going to be, much more fertile ground. I think the consumers there are going to be in better shape. They don't have the kind of debt that you have, let's say, in the United States or some of the, more developed Western economies. You have younger populations. They're still working, educated, skilled, making stuff, and so they can generate real demand, because they could also generate supply to create that demand. And so, I also want to invest in those economies. I think emerging market stocks will be winners in this environment. I think they'll do better on balance than the developed markets. And I think, overseas markets will do better than domestic markets here in the United States. And I think equities will do better than bonds, but it depends on the equity. I mean, because there are stocks that are going to go bankrupt, and that's, you lose 100% if your company goes bankrupt. But a lot of stocks that won't go bankrupt, investors will decide that maybe they're worth 10 cents on the dollar or 5 cents on the dollar relative to what they thought in a very different investing environment.
So Bitcoin is up about 40% to start 2023. It's the fastest start since 2013, about a decade ago.
Yeah.
What do you think is driving that demand? Is it a risk-on, risk-off environment? Is the central bank balance sheets just getting an injection of liquidity? Is it people who are worried about a potential US default trying to get out of the system and try to find other assets? Like, what's driving such a big movement in the price of something like Bitcoin to start the year?
Yeah, well, keep it in perspective. I mean, the price is around 22,000, whereas last year it almost hit 70,000. So the reason it's had a big bounce in January is because it got destroyed in 2022. It's one of the worst years it's ever had. Certainly in terms of market cap, it has to be the worst year it's ever had as far as how much market cap was lost during a calendar year. So we had a big drop. The ride to zero is not going to be in a straight line. There's going to be plenty of bear market rallies, and we've seen a bear market rally in Bitcoin. We've seen a big bear market rally in all of the crypto-related stocks that were down 80, 90% last year. They rallied too really big. Look at the Cathie Wood ARK Innovation ETF, which was a disaster, or fund was a disaster in 2022, and it had a big bounce. So all the stuff that really went way down went up. Now the question is why? Well, maybe there were some shorts that covered all at once. You had a lot of shorts that covered, and so that created some buying. Also, I think there is some speculation. People see these stocks that are way down, and they're like, hey, let me play a bounce. Maybe, hey, Bitcoin was 70,000 and it went to 16,000. Maybe it'll go to 25, 30,000. That's a pretty good return. Let me get in there and so I think you got some speculative money that came in there. But I think everybody that bought the losers from 2022, they're going to lose again in 2023. Today was a pretty bad day. I mean, look at some of these stocks got really beat up pretty badly. It was technically a very bad day, the way the market reversed. But particularly in the crypto sphere, a lot of these stocks, got shellacked today. Coinbase, MicroStrategy, some of these stocks. But I think that they're all going to make new lows. The FANG stocks as well. I mean, it's a movement out of momentum into value. That's why we did so well last year. I mean, look, if you look at the money that I manage, right, at Europe Pacific Asset Management, my two key strategies where, most of our money are, we have a dividend payer strategy and a value strategy. And for the smaller investors, we created mutual funds that mimic those same strategies in our separately managed accounts. And you can buy those funds through my asset management company, a broker dealer. You could buy them at any of the discount brokers. And if you look at what happened with US News and World Report, they just came out a couple of weeks ago and they looked at 350 large cap value funds. And these two funds fall into that category. They're two of the 350 funds. And US News and World Report ranked these funds not just last year, but just over 3 years, 5 years. And they said, okay, what's the top fund? And they ranked the top 60 out of the 350. And my two funds were number 1 and number 3. Now, somehow Goldman Sachs got to number 2. Hopefully I edge them out next year and I'm 1 and 2. And Goldman Sachs is, somewhere lower. But the reason that I did so well on a relative basis, on an absolute basis, we didn't make much money last year. We were positive in those funds, which was good in a market that got killed. And the reason we weren't up more is because the dollar was up 10%, and these are all foreign funds. So we had to be up 10% just to break even, and we more than broke even. But I think the reason I did really well, and the reason we were able to make up for years of underperformance to get so highly ranked, was because of the types of stocks that we own and the sectors that we overweight. And it's value, it's dividend paying stocks. It's, we avoided a lot of the tech stocks and the financials that really blew up in 2022. And I had avoided them for years because I knew they would eventually blow up, and I don't think they're finished blowing up. And so I think that those trends that were in place last year are going to accelerate. They've had a reversal in January. Those two funds are lagging. They're up so far this year, but they're not up as much as the benchmarks because the benchmarks still have all these overpriced crap stocks that bounced. As this reverses, I think these strategies are going to thrive once again. And I think that they'll do even better this year because I believe instead of going up 10%, the dollar is going to get killed in 2023. I think this could be one of the worst years the dollar's ever had. Of course, 2024 could be even worse, but I think we're going to start to see the dollar going down, and that's going to be a big headwind for any of the non-dollar, international strategies.
When you see the dollar going down, does that mean that an asset like Bitcoin will benefit from a weakening dollar?
It could. I mean, Bitcoin can go up or down for any reason, right? I just don't see the correlation that gold has to the dollar in Bitcoin. I mean, if you look at the trading, most days, if you see the dollar is up, gold will be down and vice versa. That's not necessarily the case with Bitcoin. Bitcoin, to me, is more correlated with Cathie Wood, ARK Innovation, with those type of stocks. That's where I see a strong correlation, not to a currency market or the precious metals market, but to other high-risk assets. Now, can some people, like you, for example, you may react to a weak dollar by buying Bitcoin because you think Bitcoin is some kind of digital gold and an alternative to gold, and so you want to buy it as an inflation hedge. And you're probably not alone. There are some other people that might do the same thing. I just don't think there's enough of you out there. And I think most of you who think that way already have most of their money in Bitcoin. I don't think they've got a lot of dry powder right now to buy more Bitcoin. But I also think there's a lot of money still in Bitcoin that wants out. You got to remember that. There's a lot of people that got into it because they thought they were going to make a quick buck, and now they're kind of stuck and they're looking for any kind of strength to get out. You always have the wild card of the Grayscale Bitcoin Trust. I mean, what's going to happen to that? What if they end up having to liquidate all their Bitcoin? What if all that Bitcoin that's locked up in that trust ends up having to go onto the market? I mean, who's going to buy that? So there's a lot of wild cards out there. And then you have all these companies that are bankrupt, may have to be selling their crypto assets, how much leverage is still in the system. There's so many potential bombs that could explode in the crypto space. So I wouldn't look at it as like a safe haven or store of value. I mean, it's just so much risk compared to just buying gold, which doesn't have any of those risks.